Good morning, it's Rich Pawson for the Critical Point Podcast. It's April 7th. Let's look at the stock market as of this morning, and let's look at the intraday. Yesterday we did not say much on the intraday, interweek patterns. Anyway, we can see we had a bottom back here on April 1st. Market rallied into a top, set back into a level 4 bottom intraweek. This is the most important type of buyer-seller interest during a week, and it does have that upside down U-shape, V-shape kind of cyclical pattern, fits minimum number of days. It was choppy and sloppy, broken up at times, as if they couldn't make up their minds, and what it was doing was bottoming for a larger trend. Okay, now we now have a very robust minimum variation, strong upside for an L4 top. The L4 top can occur the first half of the day session today, may have already been placed overnight, and it should pull back into a level 4 bottom due later today into early tomorrow, and then yet another level 4 upswing. We think downside is rather limited, probably won't even go back to 2600 for this L4 swing. Now, there is an alternate scenario suggesting as of 2 p.m. yesterday, this level 5 was actually the first and normally the ideal opportunity for a level 4 top completing a swing this way. Since it's already gone higher overnight, this would be a warning the market's going to rally for the next 2 days, and the level 4 pullback coming would be even smaller. It may not even work. So it could be possibly that strong a market, and we don't know how to decipher what the market wants to do, which scenarios they're going to use here. So difficult time with that. We're thinking it's a little greater probability that it's time to pull this back in L4 rather than keep on running. But just want to warn you, this could be a runaway market. Not much else to say on this interweek stuff. Very impressive trend here that's basically due to the fact that some are now willing to bet the economy will start to open up again, and soon, willing to bet that the virus is peaking out for the world, if not the U.S., this week, next week, maybe the following week, and they're looking further out and taking a gamble here that stocks are cheap, it's time to buy them. But there's plenty of bears out there, there's plenty of bad data coming that could cause some other issues down the road. Let's zoom out to the larger trends now. Now this is the daily chart, and those level 4 swings just create pops and drops along the way of trends for a level 3 cyclical trend. That also relates to buyer-seller interest, but you'll start to see fundamentals having a little more of an impact, a little bit of valuation-type economics, although most of that stuff is meant for the still larger trends during the year. At any rate, we believe as of March 31st, a level 3 top was put in place. If you're accounting from March 20th, it's saying, oops, something went wrong. It didn't have enough patterns in it, even though it met enough time. If that's the case, there could be a sharp drop here this week to prove that top and then go still higher. But we're going with the idea that we probably should have stuck with the original forecast that the L3 top was March 17th, not March 20th. This would actually complete a standard pattern for a level 3 and would suggest the market's on its way higher probably into next week for the next L3 top. So again, these are waves of buyer-seller interest, and the emphasis is flipped now to the buy side because there's probably a more important level 1 bottom. Now we realize we've been warning it could be less important, a level 2, meaning a few months down the road it's going to take that low out or test it. But right today we've decided to become more brave and go with the idea that no, this is a major low and perhaps even a long-term low. At any rate, the market should rally up into a level 2 top that we'll show you in a moment in the weekly chart, and these level 3s should now be increments on the way up. Now, we think an L3 bottom was placed April 3rd, and that caught us off guard, caught the model off guard. The model jumped on it with this strong momentum saying just go ahead and call it in place. It did meet a minimum number of requirements on a number of days and L4 patterns, waves of buying and selling, but barely so. It was a little flaky. However, it's in rule violation of not the correct number of weeks. So again, something might slam this down this week just to say, oops, I forgot to put in a level 3 bottom, put it in real quick, then oops, boy, I've got to get back up there for a level 3. But we don't think so. We think this is a fairly strong market. Now we have nearby upside objectives in the 2750 area to 2850. You may recall we have other objectives all the way up into the 2900s. This is looking strong enough to consider it's probably going through these objectives, but let's take it one step at a time and see what we get. For anybody following this L3 trend, unfortunately, your risk point is probably down there in the 2460s area. You might be able to trail that soon. You have the 5-day average, which could now be some kind of support or buy level for at least some of the technical crowd and some of the funds. Let's zoom out now for the next larger trend. And you've seen this chart many times, and boy, it's now proving correct. Back on this week of the strong positive reversal, we said it's either level 2 or level 1. We've gone ahead and pushed ourselves a bit here, taking on the risk and saying it is level 1, which also means it could be the first opportunity for long-term bottom. We said that we set up these objectives that the market should rally into the week of April 13th to the week of May 4th, and then soon after we set up a sub-objective inside of it saying really it should top no later than week of April 27th, and then we set these price objectives, and we're now concerned with this momentum. These price objectives are a little bit low here. It can trade into the 2900 level, and it might even let trade to some of these former support levels of 3100. So this could be quite a robust rally here in just the next few weeks. But once it tops for level 2, it should pull back for a level 2. And we think if we're correct on this level 1, and if it is the long-term bottom, it really should only pull a retracement, maybe no more than 50 or 60% or so, and maybe not even that. And then it should rally into June, July for a level 1 top. We have the weekly stochastic was oversold, warning of undervaluation, supporting the model outlook for at least an inter-year intermediate bottom like the level 1, level 2s, and we can now see it's moved on to a buy signal, acting bullish, and if it will close strong this week, it's wide enough spread to warn us that we can have lingering near-term bullish momentum. Now let's take a quick look on the long-term side again. And the bottom line, this is only the first opportunity for a long-term bottom. And by long-term, I mean a 3-year cycle, 9-year cycle. The 3-year cycle would then be bullish into 2022. And we would then expect a speed pump, some kind of slowdown in economy, a little bit of worries, profit taking, and then right up for the next 3-year cycle. And it'll continue that process into 2028 to 2031 when the 9-year cycle bull market would peak. So we'll have a bull market all the way into those years, in our opinion. Now, the problem is the 3-year and 9 years do not have to bottom into early next year. So something could go wrong still to create still lower prices. But we're concerned that even if it is bottoming later, or even if the market believes it's bottom now, but it decides to change its mind, it just doesn't like something about the future and sells off and creates a better bottom, we get better fundamental story behind it, we may yet learn that it still did not go lower than the low of last month at 2,191.86 for the cash S&P 500. As always, manage your risk relative to the analysis of others and yours. Thank you.